This presentation is about the balance of payments, which is a document produced by every economy every year. This presentation is only going to look at one part of the balance of payments, which is called the current account. This document, which, as we've said, is produced by every economy every year, details the cash inflows and cash outflows between the economy and the outside world. That is the list of cash inflows and cash outflows contained in the balance of payments. Now, the balance of payments actually has three parts to it. There are three sections to this document, only two of which are of real importance. The first part of the balance of payments is called the current account. This has three parts. The first lists cash flows due to trade. The second lists cash flows due to investment income. And the third, cash flows due to transfers. These are the three parts of the current account. Let's look at trade flows. Trade is split into visibles and invisibles. Visibles means goods. Invisibles means services. Exports of goods are given a plus sign because they mean cash inflows. Imports a minus sign. And overall, the sign of visible trade can be plus or minus, depending on whether imports or exports are greater. The same applies to invisible trade, and the overall trade flow can again be plus or minus, depending on whether the overall exports are bigger or smaller than the overall imports. The second part of the current account is about investment income. Now, what does investment income mean? Well, UK citizens own assets in other countries, such as property, shares, etc. Foreigners also own assets in the UK. And these assets are earning income, such as rent, interest, and dividends. Therefore, there are always flows of money into and out of the UK due to rent, interest, and dividends. Inflows are given a plus sign, outflows are given a minus sign, and overall, this part of the current account can have a plus or a minus sign, depending on whether inflows or outflows are greater. The third part of the current account is transfers. These are payments between governments. Inflows from foreign governments are given a plus sign. Outflows, which are payments to foreign governments, are given a minus sign. And overall, we can have a plus or a minus for this section of the current account. So we've seen that the current account of the balance of payments consists of three sections: trade, investment income, and transfers. Each of these sections can have a plus or a minus sign, and overall the current account can have a minus, which is called a deficit, or a plus, which is called a surplus. It should be noted that by far the biggest element of the current account is the trade element. If the trade is plus, then the overall current account is almost certainly going to be plus. If the trade is minus, the overall current account is always almost certainly going to be minus. So trade flows have the biggest influence on the overall sign of the current account. In the next presentation, we're going to look at the other important part of the balance of payments, which is called the financial account. And we're going to see how the financial account relates to what we've just discussed, which is the current account of the balance of payments.